The price of gold slipped Monday after Eurozone leaders agreed to give Greece fresh bailout loans. And while gold is down, it's not out of its recent range. Joining me this Monday is Frank Holmes of U.S. Global Investors. Frank, good to see you.
Good to see you. And yes, the summer is hot and gold is cool. Cool in price, but also cool to hold.
Well said, Frank. Now let's talk about Greece managing to avoid a euro exit. Analysts I've spoken to said that gold's reaction has been muted, but it's not out of its recent range. What do you make of gold's reaction here, Frank?
Well, I think that's a lot of short-term noise out of Greece. What will happen if they do leave and the impact it'll have on the EU have to bail out all the banks and all the other sort of currency destruction that's taking place. So I think this will take months before it unfolds. But short term, I think what's more important is what took place last week on PMIs. The Global Purchasing Manufacturers Index, when it turned negative a week ago, immediately oil dropped $4. And then more data came out throughout the week. And what we're seeing is that the 800-pound commodity gorilla, China, it's actually that magic number is 50. So they're basically treading water in the water, they're underneath the water, and they have to get their economy above 50. The governments came out with several policies to stabilize their stock market and to try to stimulate economic activity. This does impact the consumption of gold. The largest monthly savings program for gold investors is now out of China.
All right, Frank, we've seen the recent headlines that gold's no longer acting as a safe haven. In fact, holdings in ETFs backed by gold are at their lowest levels in 6 years, Frank. Have investors found a new safe haven here?
No, I don't know there's a new safe haven. I think that money moves along very quickly, and the counterparty hedges. They're all looking at right now negative real interest rates. What is the difference between a negative rate in the euro versus the dollar versus the yen versus the pound? I think that these are the key factors we're looking at. But gold, we just have to take a look at lower oil prices means the Middle East recycling their petrodollars into consumption of gold has slowed down. We're also seeing this take place in China and trying to stabilize their stock market. These are short-term factors or headwinds for gold.
All right, Frank, I want to ask you about another news item that was overlooked by media. Citigroup cornering the precious metals derivatives market. In fact, exposure soared over 1,000% in just 1 quarter. Why did Citigroup make this play, and what could it mean for the metals, Frank?
That's a great question, and it could be compliance reasons with Dodd-Frank and all the new rules that come out with, that you're finally getting more disclosure. Both J.P. Morgan and Citigroup had an exponential increase in their exposure, what they call the commodity notional value. And what are the risks associated with that? I don't know, but I do know it is important new disclosure, and we'll see how it maintains itself for the next couple of quarters.
All right, Frank, we have a lot of important key data coming out this week. What's your touchdown pass going to be for gold? What are you eyeing?
Well, there's a beige book coming out, but I think the important numbers and the way we look at data is CPI numbers are coming out on Friday. I think that they're important to give the direction for global currency rebalancing.
All right, Frank, final thoughts for investors.
Well, the final thought is a shift of gold. We've written about this tectonic shift of gold that's going to Switzerland. Big bricks are going to Switzerland. They're approximately 70% of all refinement of gold, and they're being melted down to smaller bricks, and they're going to the Far East. Those data points came out last week, and they still remain very positive and directional as a huge shift in gold.
Frank, thanks so much for your comments today. And thank you for watching. We'll see you tomorrow for a brand new gold report.